Hello again, Roy.RealEstate here with Coldwell Banker Legacy in San Angelo. Today I want to talk to you a little bit about homeowners insurance. And I'm not the homeowners insurance agent, I'm the real estate agent, so I'm going to give it to you from my perspective and how things can affect you. Insurance is one of those really kind of a pain in the butt things. It's one of those, what the whole purpose of insurance is to spread the risk. So if you've got 1,000 houses and you know one of those 1,000 is going to burn down this year, then you spread the risk. Everybody pays 1/1000th of the cost of rebuilding one house, and everybody's better off. So if you're the person who's in bad enough shape that your house is the one that burns down, then you get money back. You end up getting a new house, whereas everybody else has to pay, but they only have to pay 1/1000th of it or whatever, something like that. So that's kind of how insurance works. But here's how it can affect you and the things you need to think through. So a couple of different things as you're going to shop for insurance for a home to realize is, one is you have a deductible. And just like with car insurance or any other type of insurance, the deductible is the amount you're willing to risk before the insurance starts paying. Okay, so if you have a $1,000 deductible and you have a $10,000 roof damage claim, we just recently had a hailstorm, which is kind of what brought this up. So thinking about roofs in particular now. So you had a $10,000 claim and you got a $1,000 deductible. Well, that means that the insurance company is going to pay $9,000 and you're going to pay $1,000, and that will be paid to a roofer and they'll fix your roof, and bang, you're good to go again. So that's one thing you got to figure out. It's the higher your deductible is, the lower your rates are. So it's easy to say, oh, I'm not very likely to need this, and raise your deductible, and that can come back to bite you in the case of a big hailstorm. So if you choose, instead of a $1,000 deductible, say you choose a $4,000 deductible, well, now you're paying $4,000 out of pocket and the insurance company's only paying $6,000, which is why they're willing to lower your rates. And then the other part of it is the replacement value. So you can buy insurance when you're shopping for it, depending on who you're shopping with. You can buy full replacement, or you can buy where the replacement will be based on depreciation. Depreciation is just going down of value over the period of time. So you roof a house, there's put 20-year shingles on this roof. So now you think, okay, the roof is good for 20 years, and it should be, barring a hailstorm. So 10 years into it, you get a hailstorm. Well, if you don't have the full replacement cost insurance, you have the depreciable insurance, then what they're going to do is say, well, you're halfway through the life of the roof, so that's $5,000. So, and then we're going to take your deductible, and so that's another $1,000. So when you have a $10,000 bill to replace your roof, the insurance company is now only going to pay $4,000. So again, it does lower your cost, your premiums for insurance that you pay every year, whether you use them or not, when you do that. So it's just one of those things you have to be aware of. Be aware of what you're doing when you're shopping and how much risk can you afford to take and are you willing to take. Because a lot of times people say, oh, the rates are too high, and well, they are, but it's hard to compare them to anything to really know if they're too high. But it's a lot of money for something that you probably won't get anything from. And so you can go for 2, 3, 5, 10 years and not have anything. But again, particularly in our area, hailstorms are a big thing. They're going to come through frequently. Rarely do you see roofs around here with those 20-year shingles that last 20 years because a hailstorm comes through somewhere along the way. So, it's one of those, just when do I want to pay out this big chunk of money? Do I want to pay it a little bit at a time every year for insurance, or do I want to pay it when the damage is? And if you can afford that, and have it, set aside as an emergency fund or something like that, then that's fine. But do it willingly and knowledgeably. Don't just say, oh, well, this gives me a lower premium if I do this. Let's go ahead and do that. So that's what you got to watch out for. Another thing to think about with roofs is there are some upgrades to the roofs, the class 4 type roofs and stuff like that will do a lot better at withstanding hailstorms and wind and those type of things. So a lot of times you can actually get a discount on your insurance by putting one of those heavier duty roofs on when you get ready when you're re-roofing anyway. The same thing with a metal roof. A lot of the metal roofs can withstand a moderate hailstorm, whereas a shingle roof, it doesn't take a whole lot for the normal, least expensive type of shingles. It doesn't take a lot for that roof to be totaled and need replacement. So that's something to think about. If you like the look of a metal roof, or if you don't, or if you want to go to class 4 shingles, which look pretty much like every other roof on the street, So those are a couple of options you have as well. And again, that metal roof or that heavier duty class 4 shingle roof can lower your insurance premiums in a different way. So that's a way that actually helps you instead of hurting you, and it may keep you from having to pay the deductible out because your roof may be the one that made it through the hailstorm unless it's really bad. You know, even in this last one we had in Angelo, there's roofs that were in areas that was bad enough it didn't matter what kind of roof you had, you're getting a new roof. But then there's other areas that were more on the fringes of it that if you had a class 4 roof or you had a metal roof, you might not have to have a roof replacement versus if you had a standard shingle roof that you probably are going to. So anyway, it's a complicated decision. It's real money. Make sure you understand it. Talk to your insurance agent as you're getting ready to do this, and make sure you understand the risk that you're taking in the way you do it. Don't just shop for the cheapest price of insurance, and that's sometimes what bites people. You know, they're just, we want to keep the price down, and that's good, but you may find out when you need it that it's not covering you as much as you thought you were covered. So, got any questions, give me a call. Roy.RealEstate, 325-268-0775. Thank you.